That the second quarter was also more encouraging than the first when it comes to South African trade. And this, of course, comes after recent global figures released by OPEC found that world trade grew in the second quarter after 2 years of decline. That is being seen as something of a rare bright spot in the world economy right now. Let's cross to Cape Town. Joining us, Dirk Hoffmann, Managing Director at Safmarine Southern Africa, a member of Maersk Group. Good evening to you, Dirk. Tell me about South African trade. It was actually negative, but better than expected in the second quarter.
Well, Francis, I think it's still not a fantastic picture. We saw some total container decline by 6% in year-on-year in the first half of the year. Now we've seen a contraction of imports around -5%, and although relatively better than in the first quarter, we were down by -10% year-on-year. We've seen a little bit of an improvement also on the export side from quarter one, -4% of exports, and to a -2% in the second quarter. Although we come from a relatively low base compared in the first quarter, we are starting to see a little bit of signs of improvement in trade. And I'm talking about specific container trade, so this doesn't include all the bulk ships or the liquid ships that we see on our coast as well.
Dirk, I didn't hear the beginning of your answer, so forgive me if I'm asking you to repeat yourself, but tell me more about the trends, because we know that we're finally starting to show these surpluses. We're always worried as an economy that we're importing too much, not exporting enough. What trends are you seeing in terms of volumes coming in, say, versus volumes going out? And of course, you do look at those containers.
No, of course. But I mean, we have an open economy, and in order to participate in the global economy, we both have to import and export. Now, a lot of the products or the containers that we import into this country would be finished goods, and at the other end of the scale, our exports are generally raw materials like mining and agricultural commodities that we export from here. Now, if we look just at our imports out of Asia this year, Asia is roughly 45% of our total traders' imports into this country. In the first half of this year, we saw that our imports were actually down by 13% compared to last year in the same period. Now, that's quite a concern for us, of course, as a container carrier, purely in terms of the business that we operate. Now, that could be driven through as a result of a number of things. We had a lot of instability with our currency in the last few years. We see that consumer confidence is way down. Although it's very encouraging to see that the GDP has improved quarter on quarter, we were starting to get really concerned about the import picture into South Africa. Likewise, on the export side, the first quarter was a real concern. But we have certainly starting to see a big improvement in terms of our exports in the second quarter, and now halfway through the third quarter, we're really starting to see traction, and we're starting to get full ships with cargo coming out of South Africa as well, for which we are very grateful.
So is it fair enough to say the volumes year on year are still down, but we're catching up, and things are looking better in terms of trade, basically?
Yes, I think we are catching up. In particular on the mining commodities, it's a big component of our export business. If that trend can continue as what we've seen, just to give you two examples, manganese exports, the price of manganese as an export commodity increased by 42% compared to the first quarter. Chrome is a very big commodity for us that we export. That price has increased in the second quarter by 54%. I think that also reflects the story from the GDP perspective and the contribution that mining has made to the South African economy in the second quarter.
Dirk, tell me a bit more about what you see when the rand moves. Can you weigh in that debate over whether the weaker rand really helps our exports? Some doubt over that. Then economists saying earlier this year we are seeing that finally those exports are picking up. Do you notice when the rand moves major changes?
Well, in all fairness, not really. It's not generally driven purely by our exchange rate. Our exchange rate probably have a much bigger impact on our import business. But exports is by and large driven by the demand for the commodities that we export. And China is such a big importer of our raw materials to turn that into the products that we consume every day around the world. That is far more significant than purely from a currency perspective. Now, from a trade, we would much prefer a stable or a strong rand. I think it drives the right behavior from a consumer perspective. We can import more things. We can improve the quality of life of people around. And I think far more important to see a strong rand than a weak rand. It doesn't necessarily drive export business for us.
Interesting to know. And finally, what about the logistical challenges? If we accept, which the IMF chief has been going on about this week, that trade is good for our own economy, for the global economy. We want trade. Are we dealing with those hurdles? Can you talk about efficiency coming in and out of the country?
Well, I think I can only absolutely agree with the view of the IMF, and that trade is good. Of course, we want to see that there are as few barriers as possible from our perspective when we facilitate trade. At the end of the day, we move the products for our customers from point A to point B. If it's easy for them to do business, and if we make it easy for them to do business, we can only see that trade would improve, would actually see growth through trade and growing our economy in that perspective. So we are certainly big advocates for exactly those same sentiments.
All right, thank you very much. Dirk Hoffmann from Safmarine, a member of Maersk Group, joining us from our Cape Town studio. Let's move to the markets now and look how this better than expected GDP played out.